What a day we had today. I'm going to take a look at the day trades that we sent out, talk about the sell-off that we saw, and just some of the stops that we had and how I feel like, regardless of the fact that we had the sell-off that we saw, I'm glad with what we did to position ourselves, and I'm going to answer a few questions that came up, and actually bigger questions for how I'm positioned going into June. So a few things first. When we are looking at the morning, please do take a look at the notes that I send out or join me in the room when I do the open. And I go through all the details. You know, day trading is something that, yes, I do try to send out very detailed and really preemptive alerts where it's not like get in, getting now, get out now. I mean, that's not useful to anybody. So first of all, we had our breach and we were going to wait for the breach on everything but the NQ. The NQ did set up a short. And then when everything started to rally, the NQ did stop us out. And I would play that same trade the exact same way every time, because what I do when the day is done is I go back and look and see, Rog, did you miss something? You know, because look, we're playing this real time. You know, this is happening at real speed. We don't get the luxury of slow-mo instant replay sitting on our couch, right? Real-time assessments. And we had this breach, got short. This market just nicked us out, and then it did exactly what I thought it was going to do, which was sell off. Now you might say, Rog, if you thought this was what the market was going to do, you know, why did we get shaken out? Because the threshold for the short was broken the moment the clearing range long triggered or showed that we breached the upper end of the range. Now, this was not a normal day in any way. The ranges were wider. The moves were swifter. So don't look at this and say, oh my gosh, we have to rebuild our tolerances. Not at all. Today just happened to be a wacky, wacky day. Rather than let a wacky day recalibrate what you think you should do, just check the box off on this was a strange day. And then we had 4 different opportunities. The NASDAQ got stopped out. I was bummed about that one. The ES got stopped out as well. Let's talk about the ES. So we had a pullback buy that triggered when we had a breach long. Now, this is, again, pretty classic stuff. We wait for the opening range or the clearing range to break through the highs. Then we wait for a pullback, which we did. And the markets are going up, up, up. And then all of a sudden, about 10 minutes to 11 Eastern, we had what people will call an algo flush. Here's the thing, gang. Nobody knows it's an algo flush when it's happening. So take that out of your... The mere utterance of algos are just, you know, it's like nails on a chalkboard for me. Algos now are the boogeyman, right? They're the boogeyman. You John Wick fans out there, it's the Baba Yaga, right? If we don't have news, if we don't have a reason, if we can't see the why, if there's not a tweet, if there's not a Hedgie on CNBC crying about his book, oh, it's the algos. And maybe it is, but we do not know. We do not know right away. Now, this was a pretty long short sell-off. This started just before, I mean, it kind of peaked right around 10:58, 11 a.m. Eastern, and then it went all the way to 11:15. So this was a 15-minute sell-off. So a lot of folks ask, Rog, if we feel confident about the buy, can't we just buy it? So then the question is, and that's a terrific question, by the way, the question is where, right? And it's still got to be at levels that we are comfortable being long from. And it's also got to be still, like, how do we know? At what point do we say, well, this is going to bounce? We don't know. We absolutely don't know. We took out some early morning V-scores. We took out the clearing range low. So the question really becomes, all right, if you want to buy this kind of weakness, you know, what is the lower end? Gang, the lower end for this, you know, if somebody said to me, okay, Rog, where is the lower end? It would have been a -2 V-score. So if you're asking, okay, Rog, if we were trying to find out, it would have been closing in on a -2, which, as you can see, we were closing in on. So a lot of folks ask me, Rog, how far back into the V-score can we go? And a -2 would have been the start. The fact of the matter is we could have gone to a -3. So we got really close to a -2 and the market rallied. So what I want everyone to know is there's no secret sauce to stepping in and saying, I'm going to buy this. There isn't. There just isn't. And the sooner you can let that go, the better. I still had bullish bias. I think if I had mostly options, I probably would have had the tolerance to wait for this low to get tested or even broken before I get shaken out of my calls. But at the same time, you've got to look at the reality of agro, moderate, and conservative levels and how much heat can you take before you actually can blow your account up and risk too much. Today was a wacky day. Again, don't look to sort of reshape your trading to reflect and to adapt to a day like this. This is not a normal day. Nonetheless, you can see the way this wacky day finished. It did finish in the direction of the breach, which is typically what I would expect. Now, here's another thing to remember. We got into 4 trades. The NASDAQ got stopped out. The S&P got stopped out, but there were still 2 other trades. So rather than go back into a market that we have clearly lost an edge in, right? We've moved beyond levels that we assumed we would not have to see movement beyond. The other 2 trades worked great, and we could have milked them really nicely. So when you go back into, well, how do I get my lunch money back from the NASDAQ, and how do I get my lunch money back from the S&P, you neglect oftentimes the 2 trades that were working fine for us. One was the Dow, the other was the Russell. The Dow never went through the clearing range low. In fact, the Dow triggered the conservative level entries and gave us some really nice follow through. So that's something to keep in mind there. So how did this trade shape up? How did it set up? And what do we do? So once again, following the process. Gang, if I can't give you a repeating process with rules and step by step, then everything just becomes unrepeatable and we're freestyling it like we're an athlete at the X Games, right? And so we had our breach and then we had our retreat. Now the retreat in this situation, first pullback in here, which was terrific, moved up higher, and then boom. Now, I don't know what you want to call that. The algo flush, who cares what it was, to be quite frank. We don't really know. And again, like I said, the algo becomes the boogeyman that sells it off. But we got down to 03. Now, if you check out the alerts that I sent you all well ahead of the sell-off, in fact, the alerts went out at 10:06, right? We got our conservative entry way over here. Take a look at this at 13, 14 in the mornings, way after. So this was almost an hour and change later. That if you wanted to buy at 25.35, or if you wanted to buy, which was the moderate, by the way, or if you wanted to buy at 25.05, that came over an hour later. Now you might say, well, Rock, how do I keep track? Park a limit order. When I send out the alerts to you guys at 10:06 a.m., what I'm doing at the same time is I'm typing up the alerts, putting them in the notes, and then sending them to you all. What I'm doing is the same thing that I'm recommending you guys do. I put the limit order in, right? I have to. I'm trading stocks, I'm trading Forex, I'm day trading with you guys. We're doing notes and I'm sending alerts. If I wasn't using conditional orders, there's no way that I can manage this. So I'm going to tell you, you guys might have 18 things going on too, right? That's life. That's the life of a retail at-home, oftentimes trader. Use conditional orders, right? They are your friends. So I put that conditional order in and it got filled. And then I sent out a couple more alerts to let everybody know we had a exit if we wanted to at 25.595, because all of a sudden I don't trust this market and I would like to move to a break-even stop as quickly as possible, which means this. When we hit an optional target or target 1, all of these are labeled in the alerts that I send you guys. So when we hit an optional or a target 1, we pay ourselves, meaning we scale out. You'll see the alert says to close, scale out. You can close the trade out there and take your profit, or you can scale out like I like to do. Approximately 50% of my position size. All right? So I scale out and then I move my stop to break even, which means the only thing I'm risking now is unrealized profit, not my capital. And if nothing else goes right and the market sells off again, I'm still ending my morning with profit, with a positive P&L for this symbol. But it kept going. We had a second target at 620. And then, overall, I think that this market was pretty good to us in terms of if you kept the break even or trailing stop. There was no reason to not leave the YM today without a profit, which was great, and quite frankly, takes a little bit of a sting out of that NASDAQ and S&P. What else did we do? We did the same thing on the Russell. Let's talk about the Russell stop. Some of you might say, wait a minute, Rog, we broke the clearing range. We did, absolutely. But you might say, well, Rog, why was your stop in the 1398 area? Because above 1398 is 1400, and this is a major psychological level. It's a double zero where orders tend to congregate. I'm not going to put my stop in front of a double zero where I would expect there to be some support. We put it just underneath it, right? Just underneath that level. And what a difference that made, because if I had put my stop at the clearing range, just like the ES, would have gotten stopped out, sadly. Instead, we were able to hang on to this position. It went higher to meet all its profit objectives, and I was pretty stoked about that. Now, I shouldn't say all its profit objectives. It met the initial profit objectives. It did not meet the second target. It met the first numerous times, which means, once again, from all the levels, think about this for a moment, from the aggressive, from the moderate, and from the conservative. What did we have? We had the opportunity today to take advantage of the June RTY buys, 1405, right? 1405, and now we also even looked at it from, well, let's see. Let me take a look at the details of the alert. Just make sure I get the numbers right. 1412, 1408, and 1404. Sorry, 1404, not 1405. So from every one of those levels, we were able to ride that up. So if you were looking for a 1404 and said, Rog, I'm not taking 1412 and change, maybe the 08 with an IWM at the money call, but I'm all about that 04. You got it. You got it. And up we went to our 1416 and change exit, 12 points on the RTY. So you got to follow the process. And you'll notice the process got me out of 2 trades at a loss, but they got me out of 2 other trades at a gain, and a bigger gain than the loss that I had in the ES. Now, I want to mention something else about the S&P, and I mentioned this in the class, in the chat. I always go back and say, Rog, if you could have done the morning differently for your own trades and for what you communicated in the chat room, what would that difference have been? And for me, that difference would have been to really, probably more emphatically explain that the ES and the NQ are going in opposite directions. Now you might say, well, Rog, how come we took the ES? Because you always tell us NQ is a dog walker, ES is the dog. Well, if financials and healthcare are both breaking to the upside, as they were today, I feel a whole lot better about letting the S&P, do its own thing. So we looked at the S&P long. If there's anything that I wish I probably would have really emphasized, is to go with options only on the ES or conservative and smaller positions. And we talked about this a lot in the room. But, I always feel like I could say something 8 times and it still would be 8 times well worth repeating, especially when it comes to something like this. So what's the takeaway here? When the S&P and the NASDAQ are going in different directions, even when the financials and healthcare say it's okay, play smaller size or pass altogether or use options. Because if the NASDAQ sold off, we knew the S&P was going to participate, and the NASDAQ really sold off. And we can see how quickly we shot down. So this is a lot of what, this morning was all about. And I wanted to go into a lot of detail with you all. Something else that a lot of folks have been asking is for me to do a review of some of my longer term positions. I'll do that in a separate update. I'll send that out via the alerts, okay? And we'll follow up on some ETFs and things like that. All right? So in the meanwhile, enjoy the rest of your day, and I'll see you in the next update.